This is Chairman's Briefing. Here we round up the latest mining headlines. I'm Rachel Lee. Gold rallied past the record high set in May as traders piled into bets for more aggressive rate cuts from the Federal Reserve. This represents a nearly 20% increase since the beginning of the year. Ask any analyst. To explain the price action, they'll point to the increased likelihood of a second Donald Trump presidency and expectations of rate cuts due to signs that inflation is cooling toward the central bank's target. Senior gold stocks, as measured by the GDX, have finally broken out and are printing 52-week highs. Now, if only the broader junior market would catch a bid. While some junior explorers have had impressive gains in recent sessions, most continue to languish, ignoring the recent surge in gold. Electrifying the global vehicle fleet by 2050, the target year for net zero emissions, will require an unrealistic ramp-up in copper production, according to a study by the International Energy Forum. Even without factoring in the energy transition, the world will need to mine at least 115% more copper than has been mined in human history before 2018 to meet business as usual trends, let alone the 2050 net zero target. The goal of 100% EV manufacturing by 2035 will require an unprecedented departure from the copper mining baseline. Authors of the study suggested targeting 100% production of hybrid vehicles by 2035 instead. Just so you know, hybrid electric vehicles require 29 kilograms of copper compared to 60 kilograms in electric vehicles. Next, Filo has a target on its back. Lundin approached BHP about making a joint bid for the company. Lundin would combine its operations with the Filo del Sol copper project, according to anonymous sources. Now, talks are at a very preliminary stage, and there are no guarantees that the parties would proceed with an offer. Both companies have already committed funds to the explorer. Lundin currently holds a 32% stake in Filo, while BHP holds nearly 6%, according to data compiled by Bloomberg. Taking a look at Filo's price chart, the news triggered sufficient upside trajectory to push the stock to all-time highs. Ecuador is attracting investment despite some investors' concerns about mining jurisdiction. This is a view bolstered by the Fraser Institute's recent survey that ranks the nation closer to the bottom of its list than the top. Sol Gold recently inked a $750 million gold stream deal for its Cascabel copper-gold project with Franco-Nevada and Osisko. Now, gold streaming deals like this one are all about the metal. Franco and Osisko want to take possession of the physical metal and will be given a percentage of Cascabel's production in exchange for their development dollars. Next, foreign mining is pushing its McIlvenna Bay project further along the development curve, having negotiated a series of investments for up to $315 million. Fairfax Financial, Agnico Eagle, and Sprott are all parties to the company's funding moves. Deemed the largest undeveloped VMS deposit along Saskatchewan's Flin Flon Greenstone Belt, McIlvenna Bay boasts an indicated resource of 39 million tons, grading 1.2% copper, 2.16% zinc, 0.41 grams per ton gold, and 14 grams per ton silver. Based on an early 2022 feasibility study, the company envisions an 18-year underground operation with annual production rates of 65 million pounds of copper equivalent. Next, Africa-focused Montage Gold recently secured a final mining permit for its flagship Cone project in Côte d'Ivoire. This marks final approval required to launch construction and operating activities at Cone. The total proven and probable reserves at Cone are estimated at 174.3 million tons, grading 0.72 grams per ton gold. The company also said that it's upsizing a previously announced private placement to $180 million. Trusts controlled by the Lundin family and Zijin Mining Group have agreed to subscribe for common shares that would result in them holding ownership interests in Montage of 19.9% and 9.9% respectively following completion of the offering. Next, Alamas Gold has taken steps to enhance its exposure to higher gold prices by restructuring its hedge book previously inherited from Argonaut Gold. The company announced it has entered into a gold sale prepayment agreement, securing $116 million in exchange for delivering 49,384 ounces of gold in 2025. Ramp Metals announced a non-brokered private placement financing led by Eric Sprott, aiming to raise up to $4.5 million. Proceeds will primarily fund exploration at its Rottnestone SW property. The offering is expected to close next month, around August 8th. Uganda plans domestic gold purchases to build foreign exchange reserves and limit risks on reserve investments, becoming the latest African nation to turn to the precious metal to back up its currency. The Bank of Uganda said it will directly purchase bullion from artisanal miners in a move that aligns with government efforts to support local miners and reduce imports of raw golds. Australia's Rio Tinto is developing a solar farm to facilitate the supply of renewable energy to its operations in Western Australia's Pilbara region. The project has the potential to reduce the miners' emissions by up to 120 kiloton carbon dioxide emissions per year once complete, according to Rio Tinto. The International Seabed Authority is holding a crucial 2-week meeting in Jamaica to finalize seabed mining regulations by 2025. Despite the lack of formal rules, the metals company, TMC on NASDAQ, plans to apply for a mining license by 2024, aiming to start production in early 2026. Seabed mining could meet 45% of global critical metal needs by 2065. A study by the metals company suggests that seabed mining significantly reduces its environmental impact compared to traditional methods of producing battery metals. And that's a wrap for your briefing today. Remember, CEO.CA subscribers get this briefing every Thursday. The link to subscribe is in the description below. Or, of course, you can just keep tuning in on Mondays and hear it from me. Thank you for watching, and we'll see you next week.